while retail FOMO kicks in. Smart money is cashing out. Here's the XRP truth no one's telling you. Yes, XRP just broke its all-time high. But while headlines scream new rally, something deeper, and far more calculated, is happening behind the scenes. Why would some of the wealthiest investors start selling now, just as XRP finally enters price discovery? Isn't this the moment they've all been waiting for? Over the past few days, XRP has finally broken through its all-time high. The price surged past $3.84 and briefly touched the $4 mark, a milestone that has reignited attention across the entire crypto market. Headlines are everywhere. Social media is buzzing. And retail investors are jumping in fast, driven by FOMO and the hope of catching the next leg up. But behind the scenes, something very different is happening. While new investors are rushing in, some of the earliest and wealthiest holders are quietly taking profits. On-chain activity reveals that large wallets, many of them dormant for months, suddenly started moving massive amounts of XRP just after the breakout. These aren't small traders reacting to news, these are seasoned whales who bought in early, likely at prices under 30 cents, now realizing thousands of percent in gains. It's important to understand that this isn't bearish behavior, it's strategic. For high net worth individuals, a move from 30 cents to $4 isn't just exciting, it's life-changing profit. When you're sitting on millions in unrealized gains, you don't wait for $10 to hit. You take partial profits, hedge your exposure, and secure capital. But here's the part retail completely misses. This isn't just about profit taking. It's part of a much bigger strategy. What if this sell-off was planned all along? And what if it's not a signal to panic, but a signal to prepare? See, while whales are trimming positions, they're not exiting the market. In fact, much of that capital is being rotated into infrastructure plays and private equity tied to blockchain finance. It's a move from liquid speculation to long-term positioning. At the same time, XRP is gaining traction in ways retail doesn't fully grasp. Ripple's ongoing partnerships with global payment corridors are expanding, and some recent whispers even suggest tokenized debt issuance on the XRP ledger may be coming, bridging traditional finance with crypto rails. This is the phase smart money lives for: sell into strength, rotate into underpriced opportunities, and re-enter once the hype fades. It's a cyclical strategy, and it works. So the question isn't, why are they selling? It's, what are they positioning for next? What happens when the crowd realizes the exit wasn't fear, but a setup? And what does that mean for XRP's real top? Right now, XRP is sitting in a unique position. It's no longer just a speculative asset. It's an active component in pilot programs tied to real-world finance. Institutions are watching. Regulators are engaging. And the groundwork is already laid. Retail may be late to the data, but they're early to the emotion. That's why they're buying breakouts, not building conviction. Whales are doing both. What comes next isn't just another rally. It's the next leg of a longer-term shift. And if XRP continues to prove its utility, it won't just challenge its all-time high, it could redefine what's possible. This isn't financial advice. Always do your own research. But based on current trajectory, infrastructure growth, and institutional interest, XRP could still do a 10x to 20x in this cycle, reaching $10, maybe even $15 or more if the momentum holds. That means even after this short-term correction, the long-term upside remains massive. What do you think? Are the whales just cashing out, or setting the trap? Drop a comment below, and if this video brought you value, don't forget to like, subscribe, and hit the bell so you don't miss what's next.